What's really happening inside Melbourne's construction market right now? I'm Dion Bessa and this is Beyond the Deal. Welcome to the show. Today we're breaking down the state of construction across Melbourne's inner ring and blue chip postcodes, and joining us, the team shaping some of the city's most premium developments, Illan Samuel from Samuel Property. Welcome to Beyond the Deal. Thank you for joining us. What is the current state of the construction market in Melbourne?
Yeah, thanks Dion. Appreciate you having me here today. Look, there's a lot of positive sentiment that we're seeing at the moment. It's a great time, I think, to be looking ahead to be doing business in Melbourne. We've got a great range of builders on market. We've got great planning reform in place and suitable zone sites for development. So we're looking very positively ahead to what we think is the start of the next cycle.
So we've seen a lot of change over the last couple of years. We've seen interest rates go down, we've seen construction costs go up, labour shortages.
Correct.
What are you seeing at Samuel Property at the moment? Are things getting easier?
Yeah, I think so. And look, it has been a hard couple of years, so that's where we look ahead, and we're really positive about a lot more stastability in the marketplace. So we're seeing buyers engage a lot more with our campaigns. So sale inquiries have come up 10-20% week on week, and that's growing.
Yep.
And I think that talks to the fact that there's a lot less supply in the marketplace. So buyers have less choice. They need to be a lot more clear and deliberate with what they're looking at.
So I'm speaking to a lot of developers across Melbourne, and they're constantly complaining about timelines blowing out. How are you managing that risk or mitigating that at Samuel Property?
Yeah, we're working harder, which is always a positive way to look at things. But I think those timelines and that instability, as I mentioned, the market is adjusting. So the planning reform gives us a lot more confidence as to how we can move through the cycles. We're engaging early and regularly with builders, and we're probably being a little bit more realistic with our timelines. So less complaining and more getting on with it.
So let's just talk a little bit about that planning. What changes have there been to the planning across Melbourne and Victoria?
Yeah. I think the most significant has been the development facilitation program through the department's the minister's office, and then what that really does is allow us to streamline the process and work directly with the minister's team to get great planning outcomes on key sites. So we're working through that process at the moment. We're finding it exceptional, and I think that'll allow us to work through a process that will be with a permit 6 to 8 months from lodgement, and without the threat of third-party appeals, which is really significant to give confidence that we can deliver product in the next cycle.
Got it. So right now we've got things going through planning much quicker, a lot less red tape, which means you're going to be getting to a point where you can actually get the project off the ground, out of the ground quicker. Where are you seeing buyer sentiment at the moment? Is that improving as interest rates are going down?
Yeah, I think the market is really adjusted to what they price expectations. So prices have grown over the last couple of years. Whilst we talk about the market lagging, we have seen steady growth, and I think that's important to recognise. Developments don't happen unless there is growth. We need to maintain margins. So as it's well known that construction costs have increased, developers have had to adjust accordingly, and buyers are adjusting the same. So if you've got the right product in the right location and the right team behind it, we're seeing the right outcome.
So let's talk about that right product. So, in the past, before, I suppose, COVID, up to 2019, 2020, we were selling a lot of these apartments, inner city apartments, to investors and first home buyers. We've seen an influx of downsizers coming into the marketplace. What demographics are you seeing coming into the apartment space now?
Look, we're still seeing a steady cross-section of buyers. Again, depends on the development, in which product, in which location. In the inner ring suburbs, you'll always see the luxury product downsizers, and they're coming off, those $2, $3, $4 million homes, and they're looking to have a lock and leave and a secure lifestyle. And then more in the inner city areas, we're seeing product more around that $1 million mark, which is hitting the market really strongly. And that product at the lower, well, I say lower end, but that $1 million mark in Melbourne, which is still significantly less than other major cities in Australia, we have a lot of buyer markets open. So local investors, which with the stability in interest rates now, they're coming back in droves. Interstate investors, overseas investors, first home buyers are now coming in with some of the schemes the government's put in place, 5% deposits, and then we're seeing the established market still continue. I think a big driver of the market is the lack of suitable rental stock. So we've seen low vacancy rates, sub 1%. And I always say to people, imagine that's 1 in 100 properties available for rent, and that has to be a property that you want to go into, right? So anyone who's tried to rent a property in the last 24, 36 months has probably seen how difficult it is.
Okay.
And we're seeing those rents increase because it's a simple supply and demand equation. So I think we're seeing people try to get out of the rental market and into the property market. The disparity between the cost to buy and rent has never been less, particularly in Melbourne. So that market's starting to move, but again, the buyer still wants a quality product in a quality location, and they don't want to deal with, I guess, the misnomers of off the plan. So am I going to be having a building full of defects? A good team, whether it's the sales agent, the developer, or the builder, can circumvent those issues.
So let's talk to a few different types of buyers at the moment. We've been seeing at Bessa & Co. hesitation from investors. In fact, we've been seeing investors divest from the property market. For all those investors watching out there today, with the low vacancy rate and obviously costs coming down, market picking up, are you recommending investors start getting back into the Melbourne market?
Yeah, absolutely. I mean, again, I'm not an economist, but the stability of Melbourne in terms of population growth, supply and demand, so what we're actually producing, a fairly steady economy in general, and where rents have been increasing year on year. I know a lot of investors have come out, particularly on older stock, because you do have to bring it up to a certain standard. But what we are producing as brand new stock is at that standard. So it's very straightforward in terms of buying it, putting the blinds in, and then you can get a tenant in there, and typically there's not much more else to do.
Less compliance.
Yeah, and again, as interest rates have come down, you look at what the gross yield is versus what the holding costs are, and you forecast ahead, the accesses have almost crossed. So I think there's some pretty good times ahead for investors, and we can't hide the fact that apartments are a very straightforward investment, right? You don't have a roof to maintain, there's an owner's corporation. So it's very much put into a portfolio, you hire a good property manager, I'm sure you've got a few in your office.
Absolutely.
And you can come back, and the vacancy rates are, like I said, extremely low. So where the infill market, that's the advantage over the greenfield market. So if we're developing 100 houses 2 hours from Melbourne, the vacancy rates are actually quite high out that way, and the churn can be quite significant. But in the inner city, you might have an apartment empty for a week less.
And that's exactly what we're saying. So let's talk a little bit about government policy. Lots of targets out there, federal and state. What's your opinion? Achievable or not?
No, not achievable, unfortunately. I'd love the government to be producing 80,000 dwellings a year in Melbourne, Victoria, and obviously across Australia. But it simply won't happen. And I think I've said it from day one, it was never going to happen. Very much clickbait. I think until we start behaving like we're in a housing crisis and really do some drastic movements, we won't actually get those numbers. And that's why I think that rental market and anyone who's even engaging in the market now will benefit, because that supply bubble is really only going to be very much exasperated in a year or two. So, I think they could be doing more, particularly with the affordable housing piece, which I don't believe is the private sector's place to play. We very much, it's a business, and we need to make a minimum return to make projects feasible and want to do them. Money always finds the right return, I say, and private developers are no different. So the government can obviously produce significantly more housing, key worker housing, low-cost housing in the right locations, but that would be something that they'd have to lead.
Okay, so greenfield versus infield, or do we need a combination of both?
I think when great question. I think when the market is at its best, both markets are working appropriately. The government for a long time has pushed the rhetoric of 70-30, so 70% of new development in the infill versus 30% in the outfill. And the science behind that is pretty straightforward. We've got the amenity. The roads are built, the trains are built, the shops are there. I use the analogy often when I talk about this. If we think about where housing commissions were initially built, they were around the jobs, the amenity. You didn't need a car to go and get a job. You could walk. Everything was in your, and that creates a lower cost of living. So I think we definitely need to have the inner areas moving. Part of that is considering what's the appropriate product. In Victoria, we have the better apartment design standards, and that really sets a minimum benchmark, which sets a minimum cost to produce a property. Forget taxation. So, I'd like to see both markets moving. I think they both have a beautiful place to play. It's just about how do we get that balance.
So for all the developers out there, Samuel Property has thrived over the last couple of years. Some would say they're trying to survive. What opportunities do you see out there for developers now?
Yeah, I think, and I appreciate the kind words, I think there needs to be a bit of reflection as an industry. We're very good at complaining, and what I think as all, if you think of other markets that have been, had their ups and downs over the years, it has to be innovation.
Yep.
As a development industry, we need to look at how we can do things more efficient, quicker, and get on with the job at hand. And there is a really great opportunity. So for us, what we've done is think about everything that we do, how can we pull that task apart and do it better? And that might be taking on more risk in some instances. So, designing the balance of the building while we're still just starting to sell it and see if there's any market acceptance. I think time is the enemy of any developer.
It is.
And so for us, we need to think about how can we be more efficient and go faster, because the market will simply only accept what we give them. We can't just ask for more and expect the same.
So for all those buyers out there that are sort of sitting on the sidelines and waiting and considering buying something off the plan today, what message do you have for them?
Well, don't wait. I think now is the time. Personally, I would never wait until the market's hot and there's 4 or 5 people trying to purchase the same property. Off the plan creates a great opportunity for people to essentially control the process. It was in the media recently about quoting regulations with established property, setting reserves early.
Very controversial.
Off the plan is it's a private sale essentially. You can come in, you can see somebody, you can decide what you want. The price is set; it doesn't change. You can reserve it. You can go do your due diligence, and I think. I respect the market that anytime someone's looking to purchase, they have to talk with their entourage, their lawyer, their accountant, maybe their parents, anyone else, their trusted advisors. So off the plan provides an opportunity to press pause, do that whilst the price is still static, and then come back and lock it in, and obviously customise. I think the people who are still active in the market are the ones that are passionate about what they do and are good at what they do. So if the market picks up some steam, you'll see a lot more players come in. They may not be all the same quality, but they're looking to take opportunity of the situation. So right now, anyone who's active, they mean business, and they're prepared to work with the buyer accordingly.
So you're saying to all the buyers out there that are waiting, don't wait, get in there now. Prices will move in the future.
They have to. They have to. And look, it's not just my opinion. Prices will move as we see older stock absorbed by the market. So the net absorption goes through. And what we see is the new stock coming through, which has to be created at a certain price for it to be created. So I think there's great opportunities now, and there'll still be great opportunities ahead. But the difference of where pricing is moving versus, say, wages, I think we'll see the market in Melbourne move away. It's been said forever and a day that Melbourne, when the gap between Melbourne and Sydney gets greater than, say, 30-35%, we're currently at about 50%, there's a shortening and it contracts back in, because we often are very centric to wherever we are, where we work. But we have to also think about, if I'm immigrating into Australia, I have a decision to make. Where am I going to move? If I can earn similar money, but my cost of living is 20% less than in Melbourne, we've still got great schools, we've still got relatively low crime against the rest of the world. That decision is quite easy if I've got 20% more in my pocket from a housing perspective. And housing is really everyone's biggest cost in life. That's where your castle, to say.
Absolutely. Illan, thank you very much for joining us. This program was brought to you by Bessa & Co Estate Agents. This is Ticker. We'll be right back.